Welcome back. Paying up at the pump, national gas prices just 14 cents away from reaching $3 average. That's over 85 cents higher than a year ago. Oil demand tumbled at the start of the coronavirus pandemic. Analysts now are looking toward the summer as demand for travel and reopenings could push prices even higher. Joining me right now is GasBuddy.com petroleum analyst, Patrick De Haan. Patrick, great to see you. Thanks very much for joining us. What do you think's behind this move in oil and gas?
Good to be with you, Maria. Well, a lot of what we've really been seeing is America returning to normal. Americans getting out on the road, filling up their vehicles. Demand for gasoline prior to last week had seen 6 weeks of straight increases. Now, we did see demand buckle a little bit last week because Easter pushed things up. But this is really a response that we are returning to normal. Oil companies still trying to catch up with the recent surge, just like airlines are now just adding pilots and flight attendants. Things are coming back fast and furiously, and that's why the cost of gasoline has gone up to $2.85 a gallon, $2.86 a gallon. Like you said, we're still on the doorstep of $3 a gallon. And if America, really takes to the road this summer, we could still theoretically push that $3 a gallon level at some point.
Patrick, I'm wondering about leasing of gas, because when the XL pipeline was forced to shut down, a lot of states and their legislatures said, look, if we're not going to be able to derive half of the revenue that we get from the leasing on federal land in our states, we are going to see gas prices go up. And I'm wondering if policy is also part of this.
Well, it certainly will be in the future. I would note that oil producers are still producing about 2.5 million barrels less of crude oil every day than they did before the pandemic. So keep in mind, it's almost like those barrels are grandfathered in. Those permits have been issued. So really on oil companies to return that production. But absolutely, the fact that there's been the moratorium on new drilling on federal land, that's something that will affect prices in the future. And if we have another 3 years of the Biden administration tightening rules against the fossil fuels industry, we could see higher gas prices and are likely to as we continue to move on.
Yeah, just one more policy, Brian Brenberg, that's going against the interests of the American people.
Yeah, and I think it's so similar to the story of the overall economy. In the short term, we look at the economy and say, oh, GDP is going to be way up because it's a demand story. Same thing with oil and gas. In the short term, prices go up because it's a demand story. But it's that longer term question of where do the investments happen? Who has confidence in this environment to make a long-term investment to expand capacity when you don't even know if you can get a permit, Patrick? I mean, you don't know if you can get a permit in the future. You don't know what kind of regulations are going to be involved in trying to build infrastructure or a facility. It seems to me that that longer term story is more uncertain than ever when it comes to oil and gas.
Yeah, absolutely. As you mentioned, I mean, some publicly held pensions now getting out of the fossil fuel sector because it doesn't look as good. So eventually this is going to turn against supply and demand, and oil producers, are obviously going to feel the impacts down the road. And of course, whatever oil companies feel the pain, that's something consumers will feel as well. So you look down the road several years and the permitting is impossible. If oil companies are not allowed to meet that demand from American consumers, they are certainly going to pay more at the pump as a result.
All right, Patrick, great insights as always. Thanks very much. Patrick De Haan will be watching the markets.